TGIF Warriors, how you doing? Sinatra. Hi, Ryan.
Hey, Dale.
Mike Bergman, Brand, Michael Weissman. So here we go. It's like Wheel of Fortune, which I don't watch. Some people are addicted to it. Anyways, I may as well start with you, Ryan. Every rally failed.
I'm sorry. I hate to jump in really quick. Hey, Dale, and hey, good morning, team TGIF. And I want you to continue with Ryan here in a second. Just want to let everybody know. I know K-Man, he just let everybody know in the chat room, in the ForexAnalytix chat room, and Mexican inflation just came out. K-Man, if you're there, do you see anything out of the ordinary other than the year-over-year rate?
Prior, but it's roughly as expected. So
yeah.
Let's say as expected, looking at the overall inflation picture, but nothing really out of the ordinary that is going to change much to the Mexican peso right now, I'd say. But that comes after a bit of a lukewarm Mexican monetary policy report. So I can't see a trade in this particular report, no.
All right. Thank you very much, K-Man.
Look at the expansion of range.
Yeah,
expansion of ranges. Wow.
Big carriage trade and wine. Good morning, Dale. Big
Good morning, Kay. I mean, after all, I mean, since we're on it, since we've gone from a low vol environment for quite some time to a burst. I mean, sure, it could be short covering, but it's almost like the character of the market changed on this.
Well, the point is here, Dale, is this is one of the biggest carries in the FX market. So if you're seeing that type of volatility where the dollar is strengthening against the peso, that means that risk markets or equity markets are really more at risk
nervous.
now. They're probably a little nervous.
Yeah.
If you zoom out a little bit, you'll realize how important that zoom out. There you go. That 1740 level is, that previous support. It's right, 1745. Sorry. Anyway, I just wanted
look at that divergence at the last low compared to June. So it had glaring divergence down there too. Wow, it looks like a wedge. All right, it's going to 1920. Anyway, let's get back to more benign things like we could talk cable and euro, which has been trapped in this triangle for a while. I guess we're going to probably come out of it depending upon the number. And if we finish here in the end, it is a reversal week. So just something I was thinking, one of my notes for Pinkert thoughts is that we had this. If this is a failing rally, what preceded this rally that it's failing from? This. So, I mean, there is a possibility that we do this from this if we start getting, there's stops along the way, especially 38, but that we could do something like this and trade 120 US dollar yen. What would be the economic backdrop and market backdrop if we had the yen fall dramatically like that over, say, the summer?
Really, really bad data from the US.
Okay.
Much stronger data continuing in Japan, like sticky inflation. You get a double wind in that scenario.
Okay.
But can you see that after yesterday's data?
Yeah, well, I got to go with the charts. How did it react to the data? So we'll see. We start closing over 45. That's off the table again. But we're so close to that 45 that for a position trade, even from here to risk 180 pips or so is not a big deal if you're looking for, at least back down to 38. So anyway, that we'll see how it finishes. Just a thought.
That's the important thing. I think how it finishes the close today, not a pairs, is your initial indicator. 143.5 is my pivot line for a
That-
close. We're
That
below.
was the low, wasn't that the low last night, or
Yeah, there's been a bit of action around it.
right here, 43 and a half.
43 and a half, yeah.
Yeah, I see it.
You know, you can call it maybe 60 or something like that, but yeah, it's got to, you know, there's some factors behind this move potentially that wash out on Monday. This ETF selling stuff, if it's a factor. You know,
Okay,
it just
Nikkei lower again today, huh?
yeah,
That's looking pretty ugly.
That's looking potentially like this ETF stuff, this selling that's going on to realize money for dividends. That supposedly runs out on Monday, as I say. So that could be a last hurrah on Monday, and then it bounces again, and yen bounces, or yen pairs bounce. So there's a lot of things wonky today in the correlations. You look at oil going up, but the Luni's going up, or dollar CAD's going up.
Yeah.
You know, it's not working. Yields went up 4%. You'd think dollar yen would follow. It's not.
Right.
You know, there's lots of these little intraday correlations that you watch every day, and they're all broken. So that suggests at the moment there's something going on. I mean, why is oil going up? Do you know why oil's going up? Is manufacturing suddenly turned around, and China suddenly doing well, and oil put on, you know, $3-4 this week. So, you know, when things don't compute.
I mean, this was the strongest market. I mean, you know, it had everyone just kind of, you know, amazed at the parabolic move that we had here. So, so you have the DAX has rolled over, and that was stronger most of the year than US. So it seems like other world bourses are under more pressure than the US market. It's almost like the US market is a safe haven compared to, I mean, you look at EEM, it's pretty negative looking. Okay,
Yeah.
so.
But why is the dollar strengthening in?
I don't know, and that's a great point.
Exactly. That's the point I'm scratching my head about today. If everything's so good US, you'd expect to see the dollar going up, but it's not. So
yeah, and it should have on the higher yields, right? So you know, I still think we're headed towards par. One more low in the Dixie, you know, one more high. Yeah, I still think cable's going to trade 130, 132. I still think Euro could trade 110 and a half, and then 112. And you know, if we break out today, that's kind of what this would measure, right? 3.5. This was 350 pip move. We break out. Looks like just closes over 109. It's going to start squeezing these people. You have stops here, you have stops here, and the grand price stop is here. And then if anyone's long, I guess the stops are, you know, under 108. But that's not bearish to me, that it held up with yield spiking like that. And the cable, even better pattern, that hasn't changed. Still the leadership. And, you know, Aussie bringing up the rear commodity currencies. But the big change is if this finishes bad, I'd say for the week, that's a currency event of the week, in my opinion.
Yeah. And if that confirms on Monday, after this crap's out the way, whatever's going on in Japan, then that's your green light potentially.
And I remember K-Man, so, you know, I'll think about this every time we're near month's end, end of quarter, all of that stuff was with flows that K-Man said this was going to be an important week, and some important things may have happened. I look at S&Ps, and despite the down day that it had, you know, here's a daily. I can't say under yesterday's lows there's problems and that, you know, 43.5 would be next, but doesn't that look like there's only two drives there? You know, here's your confirmed high for drive 1. Here's your higher high for drive 2 at 70. And if we had one more push above these highs, it still wouldn't confirm. So yesterday's lows look pretty important to me. And then again, 43.40. But I could see how we could blow one more time. 4 hour kind of looks like the same. And But, you know, sometimes it only takes 2 drives, guys. You don't know how many times I've seen markets peak with just one real good divergence. And I'm sitting there with my hands in my pocket because I'm waiting for one more jiggle. That ever happen to you guys? You know, you're looking for one more jiggle and the market just goes and, you know, didn't come to your setup. I think that happens a lot to people, right?
Isn't that trend lines, and people will use the rule that it needs to be 3 touches before it's valid?
Oh, okay. All right. Go ahead, Blake.
Yeah, I was gonna say I always get one more jiggle when I get off the treadmill. I mean, you know, and I never have to look for it. I just it's always there. Anyway, sorry, bad joke. It's Friday morning.
Yeah, it's all right.
You're
in good shape, man.
You know,
gold's trying to hold. Silver became the weak sister in the last day or so, with gold silver ratio still looking like it wants to punch higher.
You know, and those, I think gold and silver are the ones to watch. I today, especially for jobs. Well, I think there's a few things that we need to be watching. One is yields. I don't know if you guys are watching this just ridiculous rally that we're seeing in yields. And it's starting. I think this is what's one of the things that's starting to affect the markets. But one of the byproducts.
Look how bad the bonds look, Blake.
They look horrible. Like, why wouldn't you be buying them right now? I mean, if you are a portfolio manager, why wouldn't you be?
You know, they look worse than corporates, LQD, and junk bonds actually have a more constructive chart than treasuries. I think we have a sovereign problem, just too much supply. Then people would rather own junk than treasuries, just by the market behavior. That's, you know, that's interesting to me.
Yeah. Bizarro world.
Yeah. All right, man. If you want to take over and get people prepped.
Yeah, let's do this thing.
With a big number here.
It is a big number. Do we have Stelios today? Is this freaking, guy
I'm
back?
here. I was away for a day, and you broke everything. What happened?
I know. Like you left, and what the hell? I mean, you know.
Yeah, we talked about it on the Flow Show this morning about yesterday's numbers, and I'm amazed at how the market reacts to these numbers, which are in many ways flawed. And we talked about, I actually saw a really nice video by Danielle DiMartino Booth, who I really, really like. And she was saying, look, there's so many reasons why this number is not as good as the number shows. And for one thing, you have a lot of jobs being lost in the tech and finance sector, and the severance packages that are being paid, they're over 3 or 6 months, so they're considered still an employee of that company, and meanwhile these people find jobs elsewhere, so they're double counted. And then you have people who, you have the biggest percentage I think ever working on part-time jobs and multiple jobs, so they're double and triple counted. And it's the question you have to ask yourself is this: over the past, say, year or two after the COVID shenanigans, what has been the case? Has disposable income gone up or down? So basically, has the rate of change of wages outgrown the rate of changes of inflation? And the answer is obviously no. Inflation is higher. It has been higher. So the average disposable income for the average person, I'm not talking about the top 5% or 10%, is going lower. So what do people do? Because things become more expensive, they don't have as much money to pay for it. Well, they go out and try to get more jobs. And after COVID, where people can see, oh, right, I can get a part-time job from home. I can get 3 of them. So they get triple counted. So it's a, this number going higher is on the face of it strong. But if you look at details, if you look at jobs lost in the finance sector, in the tech sector, in the high-paying sectors, Ryan showed that this morning, and jobs, the vast majority of jobs gained was in the leisure/tourism, which is all the very low and part-time jobs, low-paid jobs. So is this a good number? I don't think it is a good number. Of course, the headline number is a big number, but if you look at details, I don't see anything strong about that at all. But the market,
I just said hello. I mean, that was a hell of a response for a good morning and welcome back.
You had me at hello, right?
I mean, shit. Okay. Moving along. All right. So apparently, you coop up Stelios for one day and then you get this verbal blah all over the place.
It's like a volcano, man.
Yeah, I know. It's like he erupted out of like nowhere.
I was visualizing like a fan in your face, just your hair blowing in the wind from Elios's rant.
It's like that movie Airplane. Oh my god,
Yeah.
it's so funny. Okay,
Must
so
have been rehearsing that in the car with his kids for 3 hours yesterday.
no, it was 7 hours.
His
Ryan.
kids know more about NFP than we do.
Okay, so hey, let's stop for a moment and all, you know, I think I heard what Stelios had to say, and I agree. Actually, I have one of my friends. He retired, quote unquote, from Intel. He got a you know, over $1 million payout. He's been with them for 20 some odd years. He's made a crap ton of money, and you know, he's off to his whatever next thing he wants to do. He's kind of semi-retired, but he's still counted on Intel's books right now. And his severance is like, it runs out like literally in the next couple months. So it's interesting. You know, you're going to have a lot of that going on, I'm sure. Anyway, let's talk about like where we're at. We got about 15 minutes before the jobs report. I want to say that the dollar index is in a triangle. Really important that we realize that we are in a triangle and a bearish consolidation. So I think that today we can trade up to or down to the triangle, you know, high or low. I think that's a realistic expectation if we get a blowout number. Now, Ryan, what do you think would be a blowout number for the dollar to move the dollar enough today?
I think if it's over 300, maybe over the prior number, everyone will confirm the ADP was a good number, and there'll be, you know, everyone will be happy.
And
there's no
and you think it's going to be a positive reaction on a big number like that?
Yeah, but the risk, the big price risk, is if it's a big miss or even a pretty minor miss, because the market is now set its sights on higher. So we may get a confirmation move higher in the dollar in yields, but whether that lasts like it didn't yesterday will be the question. So
right,
you've obviously got to get stuck into the details as well. Headlines, one thing; unemployment rate, participation rate, wages. That's what you got to look at.
Wages, because that's the inflation front, right?
That's the inflation front. So, you know, NFP could come in at 100K and the dollar dumps, but wages could go up to 5%, and it's going to whip right around, and dollar will bounce back again.
Okay.
You know,
all right, very good.
Why you want to look at the components as well.
Thank you very much. And let's not just focus on the headline number, although you guys only have like literally 12 minutes to vote for your number to win a free 2 month or a free month of ForexAnalytix or a $50,000 trader funding program account. And so so Ryan, if you could be so kind, put that link to where the tweet they have to respond to qualify for that. And all you have to do is guess the number. And if you guess the same number as somebody else, we're going to take the first person that guessed it at the first time. So anyway, thank you very much. K-Man, what do you think? Strong number, weak number? How's it going to move the dollar? How's it going to affect the dollar today? By the way, the Aussie is it's like European lows, or no, it's not. Never mind. It's just kind of it's being sold right now. Okay, go ahead. Sorry.
I still think the market is trading some unwinds, the last unwinds into the numbers. Well, the risk is a weaker number, right? Now everybody's geared up towards a high one after that ADP yesterday, which is likely which is quite often not representative for what we are going to have on the NFP. But anyway, the risk is for a weaker number. What I do think is that perhaps some of the major players have been waiting for the combination of those 2 days, because let's not forget that in the meantime, we had a pretty strong ISM in between. So if you get a beat today, I reckon that may be the straw on the proverbial camel back for the euro dollar. 109 has been such a big magnet, and it's exactly the same triangle as you have on the dollar index, right? Because it's more than 50% of the dollar index. That's pretty logical, and we have to move away from the 109. So get a break through 108.30 for a test at 108, the figure, which is pretty important, I would say. or on the other side, start to break again above 109.30, 35-ish, and then we are probably going to see that move up to 110 again. And the faster move will probably be a miss of the NFPs, or the miss on the labor report, let's put it that way, because it's not only NFP. That is what I'm going to be watching. 142.5 is quite a big level for me on the dollar yen. And I think if we get a bad number, the one that may benefit and see a real fast spike higher could be the cable, because the market is still repricing the Bank of England expectations, and sterling has been relatively big. We can see that on the crosses as well. So those are the currencies I'm going to watch on the US labor report. And then dollar Canada, let's see if we hold 133 figure 40 on the Canadian jobs report.
It sounds good. Yeah, I'm going to point out a couple of things. You know, like the dollar yen. I got stopped out when I was like on my vacation, my son's soccer trip. Anyway, I got stopped out on my short, but I reshorted it yesterday. Anyway, I just closed out this morning at this trend line. I actually want to re-engage in a dollar yen short only on a break below this trend line, which would be a break below today's lows. Basically, that would have to be a weaker jobs report, or at least seeing yields you know, come under pressure. And one of the things we should be pointing out is the move in yields. This has been a bazonker big time breakout. Matter of fact, I saw another bank that was noting the 30-year breakout coming up. Look at this chart, Dale. He might not be here, but yeah, look at that chart, everybody else. Yeah. I mean, this is a big one, right? If the 30-year starts breaking, yeah, keep an eye on it. And I mean, I know everybody focuses on the 10-year, but that 30-year, you know, what do you think about that, Dale?
Yeah, you know, wash out to new lows. If you know, October was a low, so we basically just moved sideways. Looks like new lows could be coming here. Yeah,
I mean, look at the 10-year bond market.
I think they call it a sovereign debt crisis, and no one wants to call it. But
no one's calling it. No one wants to stick their dick out and put that. I mean, I'm sorry, stick their whatever. You know what I'm saying? All right. Anyway, bond markets. We're gonna keep an eye on yields. We're gonna keep an eye on one of the things about the S&P. This is yesterday. If you go, you know, after this show, about 45 minutes after this show, we do the morning edge, and every day on the morning edge, and I've been building this chart for traders. We do it together. Been doing it for about 20 years now. I think the first time I did this in front of traders was 2003. So yeah, you're roughly about 20 years. We build these charts every day. I used to call it a T chart. I used to build them ever since I traded equities. And then Steve had the bright idea of helping me change this into a bias chart, which is basically the same thing. We just called it a little different. But we go through all these assets every day with the ForexAnalytix community. One of the things about the S&P, you'll see the support of 4380. One of the things that we figured was going to happen yesterday, which is important for today, is that this is previous resistance, but the 618 was right here. So we're going to take out all the stops below that previous, you know, resistance and down to the 618. We came within about 3 points, and then we bounced pretty aggressively. But more importantly is that really sets the stage for today. You know where the bulls need to hold. It is 4380 in the S&P. We break through that level for whatever reason, you know, and I've asked and got many different answers from many different people. Strong data. Oh, that's going to be bad for stocks because the Fed's going to continue to raise rates, and, you know, market's going to price that. And then, you know, we're going to see the stock market really come under pressure. Or, oh no, it's a bad jobs report. Oh, the market, you know, has been rallying on good jobs reports. So a bad jobs report, we're actually going to see a sell. Look, I don't know the answer. I'm not going to pretend to know the answer, but I will tell you that this is where the market is going to define itself from being bullish to bearish. So we start breaking below yesterday's lows. You are not going to want to be on the long side of this market, because you're going to start to see weekly candles that look really effing ugly. So I'm just putting that out there right now. And that's almost across the board, because you will see the market respond. The last thing I know K-Man briefly mentioned it, but this is the dollar CAD. I'm really focused on the dollar CAD right now. I'm long. I have already established a core position. I'm going to be buying, and that was, you know, well below where 133. I am going to be adding to my long positions on a strong jobs report, weaker Canadian number, and if we breach these highs here, which is at 133.70, we break those, and I will be adding, looking for a move, you know, much higher, because this is actually a false breakdown on a weekly basis. Yeah. Got everybody short, got below the 38% retracement, caught everybody off guard. A lot of people got John G'd. Then you know, you turn around, you start squeezing, and next thing you know, we'll be trading at 136, squeezing out all the people that were chasing it on the short side. So just a few minutes till we got 5 minutes till data. I'm going to go around the horn, see, and I hear Greg is here. Greg, are you here?
Yeah.
Hey, here. All right, let's start with you, Grega. What is your best idea today going into the FOMC? What's your best setup?
FOMC, you mean NFP?
I'm NFP. I'm sorry. It's early. It's still 5 a.m. for us here. So
actually, I'm still looking for dollar to come to the downside, but I'm just afraid that we will see moves just sideways, maybe till the inflation data next week. So I'm not really sure if we'll get any kind of a real moves, maybe just some spikes to clear some of the stops on one of the sides. So, but overall, I'm bearish US dollar, but I'm not really sure if the non-farm payrolls data will be the trigger for the breakout. But generally speaking,
what's your best way to express dollar shorts? And then we have to go around the horn. We got just a couple minutes. Want to see what everybody's thinking right now. So what's your best idea with the dollar shorts?
Stocks are still in uptrend. I don't believe that this non-farm payroll support will change this sentiment. So on the other side of that, I think the dollar weakness should resume, and NLI commodity currencies, Kiwi in particular.
Okay, so you're going to see the Kiwi continue higher?
Yeah, exactly.
Okay. All right. Thank you very much, Greg. Good to hear your voice. And thank you for the coverage a couple weeks ago for doing the week ad video. If you guys didn't see that, make sure you go back and watch that, because Greg always does a great job. As Ryan, you did a great job this weekend too. So thank you very much. Speaking of Ryan, what's your best idea going into today?
Best idea going into today, I'm going to be looking, I think I'm going to keep an eye on cable. I'm getting itchy to start piling in shorts on these. Okay. These rate expectations are just going into silly land, so I'm getting a twitch to fade those.
Getting the twitch. Okay. Stelios, any ideas today?
Not really. I'm going to agree with Grega on the Kiwi. We're at the 50 and 200 DMA, and if those get taken out, then I think that's going a lot higher. On the other thing I'm looking at is the opposite of what Ryan said, more or less. Euro pound. It's very close to these lows now. I know, I've been bearish Euro pound from 87.2 when we broke that lower. We're very close to these lows, 85.20. A break below, I think, will cause the move to go forward. Lower towards 83 and a half.
All right.
Well, make me a good price. I might sell them to you, mate.
Okay.
K-Man, you got just about a minute. I'm not even going to be able to get to the charts. What? Any last minute ideas here?
As I said, I mean, the risk is for a weak one, so that's the biggest risk. So watch your 142.5 in dollar yen and 128 in cable. I think we could have an acceleration on sterling, and I do agree with Grega that Kiwi is still looking pretty decent out there as well. So
all right, Dale,
the number is good, and I think euro dollar comes down finally.
Okay, very good, Dale. We have let me move this out of the way. We have just a minute here. Any last minute ideas? I will not be able to get to the charts.
Okay, I'm short yen. I'd still
You're short yen or short dollar yen?
Short dollar yen.
Okay,
I've been talking about it. Yeah, stops over that 45 level with some tolerance. Take partial profits. Looking for 120. But I think 138's within its sights.
Okay. All right. Fair enough.
30
Steve,
seconds.
I saw Steve. I saw you out there. Any last 10-second thought?
He can't do that.
He's going to go, listen.
Listen, look. Look.
Okay,
Look.
thank you.
All right, guys. Yeah, glad everybody can laugh. All right, so hey, we got just that data's coming out in just about a second. Actually, about 7 seconds. We have the S&P. Oh shoot, that's not what I wanted. We have the S&P twice. So
okay.
Oh boy.
209. 209 average hourly earnings 0.1 better than expected on month though. Unemployment
so
decline.
dollar is dropping aggressively.
Yeah.
Look at the dollar. Woo, man.
Probably a bit of a reaction to the fact it wasn't hot as opposed to
yields have come off pretty good.
How's the Canadian looking right now? Canadian employment was stronger.
Oh,
Nice weekend.
Okay, so now 2 years coming off. I'm gonna say I just picked up a little bit more dollar Canadian down here because I like it. These are the levels I want to own. Dollar yen has completely reversed back up to 143 after spiking down. You can see yields are coming off. Stocks are spiking higher. Dollar index is just not really sure what it really wants to do here.
Yeah, really.
But stocks are rallying. I mean,
very strong Canadian report, very strong.
Yeah. And US is good as well. It's there or thereabouts in the jobs number, NFP. Forget that. Unemployment rate dipped back to 3.6. Wages went up. Was expected to fall over last month. It's gone up a pip to 4.4. Participation rate stayed unchanged, so that's a good unemployment rate number. It's positive data. I'm not sure why a dollar would get spanked on that, but we saw that happen yesterday.
Right. Well, and as you pointed out, the inflation data is strong, and that's the data that not inflation. The wages data is strong, and so that's something that the market is choosing to ignore right now. But I don't know if that's going to continue. So I know we're seeing a big move right now, but I think you might see some of this reverse here. Okay.
Good
Dale,
call on EG. Good call on EG. Still making new lows, and the yen. Yeah, I know bounced. I think this, but it.
Yeah, but watch it.
Breaking down.
Look, we're trying to get a foothold below this. This.
I love the wedge you have there as well, Blake. That. The black line takes it back to 32 where you have it anchored, 33. So I think this was the most important weekly action in the FX world this week was what the yen did. Did it without intervention. Did it because the Nikkei, after being parabolic, is coming off. This could just be the beginning. So that's my take.
Okay.
Nice take. I like it.
Yeah, and Steve, are you here? Or Steve Areno, are you listening in? Are you? I see him here. I just wasn't sure if he's actually listening in. All right, Ryan came in before we sign off. Any last minute comments? And same with Grega. Since we don't have a guest here today, Grega, if there's some charts that you want to show everybody, let us know. I'm watching this yen really.
Yeah, I'm here. Sure.
Just stand by though real quick. Ryan came in. I know you guys need to cover what's happening in the ForexAnalytix chat room. Any last minute thoughts before we sign off with you guys?
Yeah, just really watch these prices and watch yields and the dollar over the next 10-20 minutes. I'm not sure why dollar's coming off so much. It's good numbers, so just be careful.
Yeah, I mean, look, it's a yield play, right? I mean, yields are finally starting to roll over a little bit. Maybe that is the issue. Came in, any thoughts?
That's the one. That's exactly the ones you need to look at. I mean, that's the ones we need.
Wow, look at that reversal.
Yeah, I mean, that's a big one. Like I said, the 30-year.
It's going to be a false breakout again. Yeah, the F.A.C.E, as came in and said. Yeah, we might be getting the F.A.C.E.
Be a F.A.C.E, but then if you want to trade dollar in, let's say, in the short term, you don't watch the 30s. I mean, watch the 10s. And then and let those be your guide. I'm not sure there's enough in these numbers to actually pick a serious direction. Although the dollar is a little bit weaker, but it looks as if we're seeing like a bit of a continuation of what happened yesterday. We got strong numbers and the dollar could not hold a beat. So that seems to be the theme of this these first 10-15 minutes after the numbers. So we've got to watch it where it closes today, I reckon.
Well, if the dollar couldn't make headway with the tailwind of higher yields, what's going to happen if it turns into a headwind and yields correct? So that looks like what's going on today.
Yeah.
Also worth noting, from what I read a couple of days ago, large speculative accounts at record shorts in bonds, I think.
Oh yeah,
Well,
that's been that way for a while.
Well, that should end well.
Another thing that is a bit of a head scratch is that last month we burst down to 306k, so a little bit lower on that, but still good numbers.
All right. Well, hey guys, thank you very much for your commentary. Grega, I know you're here. What did you want to show some charts of some Elliott wave setups that you've got going on?
Yeah, sure.
Yeah, let's see it since we don't have any guests today, right, Dale?
Right.
Yeah, let's do it.
I thought Paulie was gonna be here.
I thought Paulie was going to be here too, but he
Yeah.
did not show up. So
Yeah,
it's all right. We'll have Paulie on one of these days. He'll talk about what he does at the daily roundup. But Greg, go ahead, take the charts, man.
Okay, so US dollar index still very big consolidation here. I'm just afraid that maybe this triangle will stay in place for whole summer actually, but eventually I will be expecting lower prices still later this year. So I will be looking on the other side, of course, for other assets to outperform. Looking at, for example, cable has been doing pretty well this week, and it has been stabilized here around 126.27 with free wave drop. So this was a correction. So I'm staying with an uptrend here and think that new 2023 highs will be seen. Also, not only cable, we are also seeing Kiwi that is doing very well this week as well, as mentioned earlier. So if we look at some of the targets for short term for the Kiwi, actually we are just breaking out of this channel, which by the way has seen a retest of this upper line. Also, if you zoom in a little bit, you can see potential left shoulder, right shoulder, and this could be had. So reversal pattern here could take us much higher, but from an Elliott wave perspective, I focus for equalities. Even if this whole rise from that low would be corrective, we could see a move towards 6,300 in my opinion. But then obviously if we get to that level, that we could be looking much higher later on, because if you look closely here, you can definitely recognize a very nice bullish reversal pattern from an Elliott wave perspective. So we had a pretty nice bounce here in 2022, then free wave setback, and now we are maybe just trying to resume this this recovery. Of course, it can be a little bit challenging to catch the bottom here, but so far, I mean, at least on the smaller time frames, looks promising, as I said, for 6,300. Also, looking at maybe on gold here, gold didn't really didn't do well lately, but still it's holding this 1900 area. So a lot of traders are watching this level. It could be even, I'm not sure if, since I know that Blake loves head and shoulders patterns, I'm not sure.
Oh, love them. I
Yeah,
actually watched my balls. I washed my balls with them. I love them so much.
I'm not sure if you noticed.
I hate them. Actually, I think they're the stupidest patterns, but that's okay, Grega. Bring them.
You always show them.
I do.
I mean,
it's only they're very easy to see.
Here is one potential building up right now.
What a character you are, bro.
Like now on gold, I mean, if we can pass this 1936 and we see a daily weekly close price above that level, I think that we are going higher next week for 1970, 1980.
Yeah.
So I'm expecting sooner or later that this gold will resume higher, but with weak Chinese yuan, with very weak Aussie, and still some sideways price action dollar index. Maybe that's just not, and of course US yields are one of another reason this is not just not bottoming yet, but I think that this move will still show up sooner or later.
How about, do you think that what happened in US dollar yen is significant this week, Grega?
Yeah, I mean,
I saw your post on LinkedIn. You saw my vote on direction.
yeah, when I shared this chart, right?
Yeah.
Yeah, so that's actually the COT data, and we can see large
Yeah.
speculators being heavily short here. So it's been, we actually didn't always, you will not always see the immediate reaction in the opposite side, but you could see at least a stabilization or a sideways price action. Okay, so it happened here in 2021, right?
Yeah.
Then we got also have seen some rally here in 2022 in
That was
April,
a big
May,
one.
then massive reversal in November, October of 2022. But obviously this was much more extended move because the price for that was much lower, obviously.
So couldn't that whole move, the first move, been impulsive, and that what we've done from the end of 2022 has been corrective, and a C or a 3 is setting up here?
I think that the current drop that we are seeing is actually wave B. Okay,
so
so
so we got a C.
Yeah, to the upside, exactly. So I'm trying to do, because you can clearly see 3 waves down here, and at the same time you can see where we are currently trading.
And we had a reversal week this week.
Yeah, as you said. Yeah, I mean, it was a very good point, as you said earlier, that there was no intervention, but still dollar yen managed to make a very nice reversal. So yeah, I definitely think that later this summer will be much lower, in my opinion.
Okay, thank you, buddy.
Yeah,
I mean, wizard, buddy.
Wizard buddy.
All right.
Here's also this FIB levels that we are currently trading it. So as you said, maybe.
Oh, look, you have a 4 at 120 down there. So you had 120 target all the way down there.
Yeah, so it really depends where we close, maybe this week, as you said.
Negating a throw over here.
Yeah, I mean, it would be nice if we fall back into this channel.
Yeah, got it.
But not really sure if we'll
get great stuff, Grega.
Momentum so far.
Yeah.
Maybe a very quick look here at NASDAQ. So as I said earlier, stocks are still in uptrend. NASDAQ, it's been obviously technology sector has been doing very well. So I'm looking this to be a wave 4. I'm comparing current correction with this one of wave 2 of the same degree here. As you can see, this one goes back to April. So here I'm comparing these bars or time length, if you want, and looks like that we could complete this correction or finally see a breakout at the start of next week. Okay, so I'm definitely expecting that sooner or later this uptrend will resume. Despite hawkish Powell last week, stocks still finished on Friday, as you know, last week, very strong. So it looks like that speculators believe that that Fed sooner or later will be done, and no matter what he says. So
all right, the only Elliott guys, bears, are still hanging on, are calling the S&P an expanded flat. How long can they say it's an expanded flat? Can it expand to new all-time highs and still be a flat?
I mean, you're talking about what kind of a week?
This whole thing from October low is an expanded flat. Expanding flat.
Yeah, so in an expanded flat, market could move to a new high.
Okay.
A new all-time high. So something like here, that was an expanded flat. Let me label this for you. Okay, so that was an expanded flat.
Yeah, okay.
But markets, even if
it's like an irregular.
Exactly. Even if we look at this one, could be labeled as an irregular correction.
Okay.
So you have a lot of these formations here going on. But I would like maybe like, I think that Blake also looked at this equal ETF of the S&P 500.
That one's that's a good one.
Yeah, so here I think that we have a very nice clear consolidation. If that would be any kind of other market, that you said yourself, the dollar index is in a bearish triangle, and if we try to use the same approach, then this
risk on,
triangle. So also
Okay.
I'm comparing the cycle. You can see the blue cycles here. I'm comparing this cycle, which was 78 weeks. And so far, we are also at almost 78 weeks. Okay, so we either are going to see a breakout maybe this summer, or if we'll just keep moving sideways, then I will focus on the cycle 2, which actually makes room
Forecast a crash.
for 2024. Yeah, I mean, it's very interesting that it's much easier to be maybe bullish stocks whenever you have these massive drops, because each time when these massive drops showed up, market recovered. For now, that's not the case. So it's probably because it's a little bit more tricky situation with central banks and so on.
Oh,
but
it sure is tricky.
But overall, I'm expecting that this will resume higher.
Okay.
I will not deny that.
I had some people in the chat room, just to let you guys know, a lot of people in the chat room are saying that the markets have set up a lot of middle finger patterns. If you don't know what a middle finger pattern is, just go pull up a 5-minute chart of the NASDAQ 100 or the S&P. You'll see what the middle finger pattern is. That's a FU pattern. Yep.
Yeah. I'm sure. I'm sure everyone knows it.
Yeah.
Okay.
Yeah. Okay. Well, thanks, Grega.
Thank you.
Yeah, good way to wrap the week.
Thank you for letting me in. Yeah, sure.
Of course. Thanks for being here.
You're the wizard of our Grand Council. All right. So,
Dale, did you have anything else that you wanted to talk about?
Blake,
you're still
I know you don't believe it.
Washing balls, right?
I'm talked out. That line was the line of the.
Sorry, it just came out. You know, sometimes you're sitting there and all of a sudden you blurt it out and you're like, oh my God, what did I just say?
I'm going to try it.
Yeah,
this weekend.
You should. No, you do. You know, every once in a while, Dale, you let them rip. And next thing you know, I'm running over into my closet, grab the, tinfoil hat.
The Head and Shoulders cell. All right.
That one too.
Anyway,
do you want to know the winner? The NFP competition. Should we do it?
Yeah, Ryan. What do you?
Who won?
Well, let it go.
Right. So very close. But in first place with 210. So one away is Nil Trader. Nil Trader 1 on the old Twitter. Second with 211 is PJ Allwork. And third at 212 is Chris Topher. I'm not sure if that's meant to be Christopher. On the Twitter as well, 212. So Nil Trader has won the 50K assessment. If you're on the show, well done. If not, I will contact you via Twitter.
That's awesome. And he came in at what number? 208?
At 210.
210. And so he was off by just 1,000. That's great.
Gosh.
So we will be reaching out to everybody, I'm assuming on Monday, Ryan, because I know Ryan's stepping out.
Very cool thing you do.
Yeah, I'll get the tweet out today, and then we'll sort it out over the weekend or whatever.
Yeah, and then we'll get the new trader funding program person started, and the other two will be joining the ForexAnalytix community. Remember, if you're already in the ForexAnalytix community and you win, we just add 30 days to your current subscription. So that's what we do. So it sounds good. And hey guys, if you haven't checked out the trader funding program, there's a lot of volatility right now. We've been in a lull of no volatility, but I think this summer is going to be a little bit different from most summers. Wouldn't you say, Dale? I mean,
yeah,
there's a lot of shifts.
We're in summer, so it's already this week is the first week of summer.
Yeah, and I think volatility is going to be here to stay.
Yeah.
So if you want to learn, you want to take advantage of it, with the trader funding program. That's how you can trade our money, and you can get up to 90% payouts. We laxed the rules a little bit since we started this. So anyway,
immersion therapy. Be part of
immersion therapy. There we go. And make sure you guys all keep an eye on yields today. I think yields are where we need to be focused. The dollar is still a little weaker here, but and then I'll obviously watch equities, because equities have reversed right back down to 4,400, but it's really 4,380 that matters. And I think if you guys know that, the more you know, the better off you're going to be. So there you go. Dale, I think we pass it over
Right.
to you. And
Okay, best team on the net, everybody. If you like what we do here in F.A.C.E, the way to reciprocate is join us. And you're doing yourself a favor by doing that. I want to thank the team. K-Man, thank you, and Ryan, and Stell, and Steve, and Blake. And I think we kept people out of trouble this week, and great idea on the long side of Canada, Blake. I mean, people could have had a good month just taking that with a one lot. So really appreciate working with you guys, and appreciate your patience and your passion for what you do, trying to help people. So glad to be part of this team. You guys rest up. Let's have a great restful recharge weekend and come back and hit them again next week. It's going to be exciting all summer, I think.
let's do it, Dale. Thank you very
All
much
right,
for always
buddy.
being here, buddy.
All right. So remember, don't just count your pips, count your blessings, and really immerse yourself in the community, and then compare your results after 90 days. You have to give it at least 90 days to give it a valid test. And I'll see everyone. See you, Sinatra and Mike and Bran, and all you guys out there. You add to what makes this great. Glad to have you every day, and our mission is to add value. I think I could say what George Bush said, only this time it's accurate. Mission accomplished. All right, see you, Jean-Francois. Adios, everyone.
Thanks, Dale.
Cheers, Dale.
Thank you, team.